Thanks.
Gold fell for the fourth day in a row, pressured by technical warning signs, and that mostly upbeat U.S. economic data, right? Except for the GDP number, which showed contraction. You would have expected to see gold rise, but we have not. There is a rising appetite for risk, meaning not gold, around the world. But look at silver. Silver has suffered mightily. The precious metal dipping below $19 an ounce in earlier trading, a level it hasn't closed below in nearly a year. And we didn't do it today, but nonetheless.
Is now the time to buy, or are metals heading even lower? Joining us now is Parets, Eagle Bay Capital founder and president. Great to see you, JC. So let's talk about, I know gold, everybody's a gold fanatic out there. People who like metals tend to go to gold. But let's talk silver first, because I didn't realize it was down to $19 an ounce. Yep. And it wasn't long ago when it was $30, $40 an ounce. How low will it go?
David, silver prices are down 65% from the highs. So we're down
It's a much more dramatic loss than gold.
Than gold, absolutely. So silver tends to be the more volatile of the two metals. So here's what's interesting. When gold and silver both rallied to start the year, silver actually underperformed gold. So if there's real risk appetite for precious metals, we want silver outperforming because, again, it's the more volatile, more aggressive way to take advantage of the precious metal space. So that was warning number one, that this counter-trend rally in precious metals is just that, counter trend. We've been in a downtrend for 3 years. That's not a secret. That hasn't changed. We haven't seen evidence of any sort of bearish to bullish reversal. We're seeing the opposite. Now, with that said, you're talking about silver down at 19 bucks. That's the key support. Where I come from, triple bottoms are very rare, if they even exist at all. So typically what we see after the third bounce, we'll see a fourth or a fifth, and then it tends to give way. So I think, David, that's the tell. If silver breaks, gold's probably going to continue to break too.
Okay, but there are people looking at silver at 19 and remembering that it almost got to 42, 45 over the past year and a half. At what price would you buy in?
Well, if you have to be in precious metals, which none of us do as market participants,
but
we make that decision.
Should they?
If you want to buy it, that's your stop, and you can own it above those levels. In my experience, I think that we're going to break, and I think that it's eventually going to give way, and gold is going to follow as well. I think gold, we probably see $1,000.
Okay, let's bring in the two Ps,
sure.
Palladium and platinum. Palladium, of course, is very industrial in its use. It helps catalytic converters convert. It's big in the auto industry. And platinum, of course, has both the jewelry and certain other industrial implications. Which one do you like best?
I would put platinum in the camp with gold and silver. Palladium, I think, is the special one. Nobody's talking about it. Who talks about palladium? So what's interesting is, as gold and silver have gotten absolutely destroyed from the 011 highs and are down 65% in silver, 40% in gold, Palladium is making new highs. So we came into the year, I said, Palladium is my favorite chart in the entire world. We're up 17% year to date. I still love it. I think we're going to about 1050, 1100.
Let's talk about miners. A lot of people focus their attention on miners rather than the actual metal themselves. But what miners, particularly gold miners, have been doing in the past couple of years is borrowing a lot of money, thinking that the price would continue to go up in order to mine deeper and better and get more gold. The price hasn't been going up. A lot of them might be ready to go bankrupt. Do you short any of the miners?
I think that however you're playing gold and silver, you can also participate with the miners themselves.
But if gold keeps going down, miners are going to get hurt worse than anybody.
I agree. Correct? I agree, but the correlations are through the roof. You look at a 1 month correlation, 1 quarter, 1 year, 2 year, 3 year, 4 year, they're all above 0.9% correlated with the actual metal itself. So if you think gold's going higher, you could buy gold miners. If you think gold's going lower, you could short gold miners. It's the same trade.
Parets, and this is the guy who told us to get out of Apple and go into BlackBerry. BlackBerry had a great day today, certainly. So.
And as far as Apple, I was wrong there. It ripped. It broke through some nice resistance levels. Hey, we take we take with the good with the bad, right?
Well, if you believe in the technicals, this is a guy to listen to. Parets, thank you very much. Good to see you. Well.